Good evening, traders. This is Day Trader Rockstar, and tonight we're going to do a video on trading futures. And then this video is going to be I want to bring you the best information here. It's going to have a lot of great information, but I also want to, because I haven't put out a update in a couple of weeks on the futures methodology. I want to go back and kind of get people on board of the methodology and how important it is to stick to the rules, because I wanted to name this video I want to show you how to be successful for trading, but you're still not going to be able to do it. But I don't know if that name is going to even fit on the title bar. But what I mean by that sarcastically is the methodology that I teach has been developed over 20 years, and it's based off of the stochastic oscillator and George Lane's methodology of divergences. But I've also added different things to that to make it even better and the timing better on this. And the rules that I apply to the methodology keep us safe, and basically there is nothing out there that is going to be as good or as accurate as what I'm going to show you tonight. So with all that said, I could show you the spots and what we look for. It's important for you, and your part of it is going to be able to not trade, not overtrade until that criteria is met. When we have the situation set up in our trade, be it a chart pattern or a certain combination of indicators lining up, that's when the odds are in our favor. And I use a lot of analogies on the show, and let me start off by saying that I am a host of Day Trading Radio, and I do broadcast live every evening, every day actually, any evening. And we trade futures live. It's at daytradingradio.com. You can find it on the internet all over the place. It's daytradingradio.com. And you can watch the show and watch us trade all day. We have a great trading community, so feel free to go over there and get all the information. All this information I have goes out to the members and stuff. So, not to get off track, I just want to give you a little of my background. So we're constantly trading futures, and I also trade stocks, and we're investors. And I've been a trader since 1996. So, now at this point where everything has been, turned into a business, I consider trading a business, and that business has to have a business manual. And that business manual is something I teach, I want to teach, but it's so important to stay within that manual. That criteria has to be set. And most traders cannot do that. And I'm just speaking to everyone out there, including myself. It becomes the hardest thing in the world is when our time frame goes down and we talk about what type of traders we are. There is different type of trading, or you could consider yourself a different type of traders, if that makes sense. And I'm going to show you an example right now. Hold on. All right, here's a little image I had from one of my series that I put out. In scalping, this is what we're talking about. Scalping, hold a position for several minutes. All right, day trading, hold a position for a day or less. Swing trading, hold a position for several days to a couple weeks. And position trading, holding a position for several weeks or more. And that's basically what we're dealing with is scalping. But this technique can be applied to each one of these. And actually, as you go out in time, you will become more successful when you apply the methodology. It's just because scalping is a fast pace and a more aggressive trading zone. But so many people want it because they're looking for that instant reward. All right, so that instant reward comes at a higher price. Then a higher price is, more stress, very, very active, and and you have your margins, and you could lose money real fast. You could make money real fast. Just a little bit more active and a little bit harder to scalp. Over my experience, I deal with a lot of people who come in and want to learn how to day trade, or I should say scalp. And I kind of warn them that being in front of that market is going to force you to trade, and trading is not always the best thing to do in the market. Sometimes the market's not going to give you opportunities, but because you're sitting in front of that market, you're probably going to end up trying to make opportunities. And when you look at the methodology, and we talk about the what we need to have set up before we take a trade, it's very important that we stick to that. Now, let me see. I should have. Here's my business plan. I have all this. You can have all this. If you're watching the site or checking out the site for the first time, and you want all this information that you're seeing on the video in a PDF form, just go. I'll put a link in the room, and you could download it on our site. You got a 10-day pass to loot the site. All right, but this is an important process of being successful, is being disciplined enough to know exactly what you're waiting for. So I always say you have to have an order entry criteria. Why are you getting into your trade? A profit exit. Why are you getting out? An automatic stop criteria. Where that stop's going to go. What's the risk management of the trade for the method? What is your plan? Do you know what you want to do when certain things happen? How and when do you increase your position size? There's so many different things that are going to make this is a professional business. This is not you're sitting in your underwear at the thing, which you probably are, but you know what I'm saying. You have to take it serious. I used to tell a story when I quit my job and I became a trader. I felt better getting up in the morning and dressing up, and I thought, it was like, this was back in the day, the boiler room days and stuff. And you remember the movie Boiler Room? And they go there, or any of them, you look at this Wall Street methodology, or not methodology, but the profile of a Wall Street investor and stuff. You want to be a little classy or a little bit more business-like. And so I used to sometimes dress up in a suit just to go into my other room and just to trade, and it felt good. It felt good. Over time, it feels sometimes better not having a shirt on, but you know where we go. But I digress, right? I go off topic here. So how to set up your charts, all this stuff. You want to learn all this stuff. But what we're going to go over today is I want to show you the basic path to being successful. I want to point it out in like 3-4 easy steps, and it's really going to be up to you to do this. So I'm going to give you the kind of the bare bones path to success. All right, I really am. I'm going to show you what you're going to do, where you're going to do it, and we're going to try to stay to that path and without venturing off too much. And I'll show you what happens when you venture off. So these are the only trades I usually take. Rules of the trade. Only trade the super signals. Super signal is a merger of a quad rotation and an HPS playbook trade setup. And a quad rotation is something I invented and came up with over years of trading the stochastics. And I measured them out so they would work together on different time frames. And each stochastic look back period, when you have a percentage K and percentage D line, each one of those means something. And doing the calculation, you could kind of mirror some of the previous or bigger time frames on your 1 minute time frame using certain stochastic levels. So we get to see a very interesting, you're going to see it, and if you're going to see it in a second, but that's very important. So that quad rotation is a big portion of my methodology. And then the playbook trades, a divergence, a coil, 1, 2, 3 channel, falling wedge patterns, or the VWAP. Any of these 5 right here that line up with a quad rotation is considered a super signal. We call it quad rotation divergence. That's a divergence. Quad rotation coil. That's a coiled stochastic with a quad that ends at the end. A quad rotation trend line. That's a 1, 2, 3 pattern that comes down and hits 4, 5, or 6, and you have a quad rotation. The VWAP and a quad rotation. Coil divergence is kind of a second. That's kind of a secondary because I still trade buy and sell divergences. But anything with a quad is considered a super signal. Now, it's so important. The super signal is such a good thing, but it requires us to set up, and it doesn't mean that we're going to set up like this every 5-10 minutes. You might have 1 or 2 super signals a day. Now, these are great setups. These will give you tremendous moves, but you have to be in front of it at the right time, right? So, and I got that figured out too, because I have as a member of Day Trading Radio, I'm just going to plug this. I think this is the greatest service ever. I do what's called the Futures Trade Alert Network, and all the members have a phone, and they have their own phone, and they download the app, and they get the alert over the phone. I speak into it when we're taking that trade or when that trade is set up, and what you should be preparing yourself for. I'll give you an example for it right now before we really get off here, because this is key, and this is going to be helping a lot of traders, because a lot of traders are not going to be able to do what I said. I hate to tell you this, all right. I'll go over that in a second, but I'll give you a little taste. You see all these lines on my computer, on my chart here, all right. This is our environment that I'm looking for. I'm always looking for a directional trade. So this is how my day goes. I get up in the morning. I get over to my office. I do have an office outside my home, and I find that I can never trade in my home. It just would be too distracting, and it's not professional for me. All right. Maybe if situations were different and I couldn't, and I had to, that would make it work. But I would try to isolate myself and try to have that, that silence and that time that you could focus on the market and not always getting up and stuff. So I'll come in and we'll sit down. Now, there's a lot of things happening in the morning. A lot of news, as you know, recent events, you might see this, but recent events are always geopolitical events, can be moving the markets. The futures will be trading overnight. So when I get in, it's about 8:30, 8 o'clock, 8:30, 9 o'clock, I'll sit down at the computer and I'll just go back and overnight, and I'll start to just fill in the channels. And the channels are not hard for me to fill in. I know how we do channel work here. Actually, let's go back here. So we'll do this together fast. I'm just showing you my process. So what we're looking for, and this is part one of how to be successful, you're going to want to be able to identify a channel. A channel is a directional move in a stock, index, future, whatever you're trading. It has to be in a directional move. You could pretty much visualize a channel. It doesn't have to be exact, people. Important tip here. All right, trading is not an exact science. All right. Well, I might show you something here, and you might say, "Well, that didn't work." That quad rotation broke down. Yeah, this is not an exact science. This is a dangerous endeavor that you do that's tied to the time frame, because you don't get to wait it out. You have to make decisions fast, and the market knows that. And sometimes the market will test zones, and it'll take out stops. And there's things that are going on in this market that we can't see on above the water. And maybe there's orders down there, and maybe the algorithms will grab that order, and that brings it past your stop, and then it goes back down. But after years and years and years and decades of trading, couple decades of trading, we start to see how that plays out. And so we know it, and we add that to the methodology. So everything here is based off of seeing this over and over and over again for 20 years, over and over. So when we see a channel, we know we just have to put it in. It doesn't have to be exact. So many people ask me, "John, how do you put your channel lines in? Where do I put them in? For the bottom of the channel lines? Do I put them at the top of the trend lines?" It's very important to let that market come to you and let it tell you what it wants. All right. Lots of times you'll get a flush and then a reversal candle here, and if that comes into play, then we cancel out those candles. So we tend to kind of cancel out that candle if it's a good reversal. This case, it's not really. It's just a test of the 200 here. We came back here, but we want to reverse all that candle in one candle. That's a reversal candle. This is not really. This is fine. So you have, basically, you got to look at channels as, once you have one, the other ones will be easier to find. All right. So you have to establish one channel in your viewpoint, and then you can start connecting the dots, because the dots are when a channel turns around or breaks out, there's a high before that channel breaks out. Wherever that is, that high tends to be the beginning of a new channel. All right. And that usually will be the top pivot area, the new pivot. So remember, there's a rule that I coined. It's called the 1, 2, 3 pattern, and you just don't need to have 4 points like a straight line here and straight line here to make a channel. What you need is have a point here, a point here, and a point here. And with this 1, 2, 3, the market came down, it popped back up. All right, that's all, and then it started reacting down there. So we have this came in like this. So this is what we're looking at. It doesn't matter where it is, but as long as there's a pivot here. So we have a pivot here, and most likely maybe it comes down here and it's like this. But once we have 1, 2, 3, all right, just like that, we take that 1 and 2 and we just drop it on there. And it's usually going to be at the closing prices. And typically, I would say 80% of the time, when you have a good 1, 2, 3 channel, the 2 pivots that you're using as your first line, your third pivot will be between those. So you make a parallel line and you look for the low pivot in between these. And that's what you're doing. So now when the market comes down, you already know where the channel is. And most stocks channel out. As you look back at your charts, you'll see this. You'll see this channeling that happens throughout the day. And it might be on different time frames. The 1 minute works great because we know how to throw these. But now we're already setting up here for our trade. So we know where our next trade will come, only if we have a quad rotation. So now we have a trend line, and if we have a quad rotation, then we're going to look for that bounce. So here we have actually a 1, 2, 3, 4, 5, and here we come down to the trend line again, right here. And guess what we have here? We have a quad rotation. Now the quad rotation is a beast in its own. That's just one part of the super signal. We need, and what is a quad rotation? A quad rotation, I'm not going to go into all this today because all this can be found on the site. I give away all this information, even for trial members. Just go up to the top in the playbook. Let me actually walk you through it because I know you guys are going to be like knocking down the doors now. Let's go to Day Trading Radio here fast. I wanted to show you where to get the stuff. So when you sign up, if you sign up, remember it's free. It's just a trial there. You're gonna. I'll put the link in the video. You just sign up on the video. You're gonna get this. You're gonna be in this room. You're gonna be in this. Now I turned off the show, so because I'm doing this video and stuff. But this is probably this is what our dashboard looks like. All right. This is a trade alert box. The trades go out. These are our news squawks. Our live chat room. A lot of stuff going on in the live chat. That's where all the action takes place. And up here is all the things. We have our HPS video, the playbook. This is very important. This is where I would recommend you going right when you sign up. Go up there. And up here you're going to see how to set up your charts, all the business plan for the traders, trade plan for the quad divergence thing. I have all the cheat sheets here to help you understand these setups. Like here's our quad divergence. This is exactly a flow chart of actually what you're looking for. This is a quad divergence. This is one of our super signals. Beautiful flow chart. Makes it very easy to follow. Just a lot of stuff that was done. And then we have the quad super signal when to get out. All right, that's very important. When to get in and when to get out. It's all there. So that's where you would get it on the top of that dashboard. I just wanted to show you that fast, so I don't have to deal with the emails. Where is that stuff? That's where it is. Consider yourself. So now I go back, and I'll just go back, and I'll just throw these trend lines in. And again, I'm not like saying, oh, this needs to connect right to this, and this is at that angle, and I'm missing that, and is this a parallel? Is that a wedge or a channel? No, all these consider everything a channel. If it's a wedge, let it be a wedge, but also understand that a wedge is half of the channel. That could be a wedge very well, but the channel up here, if we ended up breaking higher, would be your trigger area. Wedges are great. Wedges break down, but you also want that divergence right here. So what you had here is a divergence. So this is a signal right here. You have a divergence. You have a little trend line top of the wedge pattern, but the important thing is the divergence. And that divergence with a quad rotation, that's all for stochastics oversold, and then after following up, it's called a quad divergence. Quad divergence is all for stochastics overbought or oversold, little pullback, and then a higher low or a lower high, a lower low, depending on buy or sell side, but a lower, and again, divergence with the stochastics. Again, if this is Greek to you right now, and you need to learn from basics, then, I would just go to those videos in the section of the playbook section, and start studying more about that. And I have tons of videos to catch you up. But the best place to learn is in our chat room because we have constant education there. All right, so now I start to build out the channel. So I'm not really worried about that. I'm just eyeballing them. 1, 2, 3. Bang, bang, drive it down. So these are all in the past, right? These are all in the past. And you say, John, well, it's easy enough in the past to see them, right? Yeah, but, and I'm the first person to say that. Don't give me anything that is not, you can't show me real time. Don't do that. I've been there, this stuff is the real deal. It's just that you have to know the ins and outs, the little quirks of the relationship quirks that you have with channels and stuff. Sometimes they take it, but the information we have down here is very, very important. This is all tuned to tell us things. This is the echocardiogram of the market. This is the health and understanding of the bigger channel. Now, I designed this lower stochastic here to represent the 5-minute time frame. But the 5-minute time frame is actually representative of the larger channel. And the larger channel is this, coming down. See the channel? And then these are the small moves, in and out. The 9-3s, in, out, in, out. These are the smaller moves, up, down, up, down. And we look for the combination when they all line up and they're on the lower trend line. Right here, boom. What do we have here? Trend line, inside the channel line. That's when it breaks out. So these are the areas, not to say you're going to be 2:40 in the morning trading, but for the European traders out there, this works great. You don't have to deal with some of the craziness of the market during the Fed speak and Trump being on the markets. You don't have to deal with some of that stuff. I find that the overnight markets are very easy to trade. Now, the hardest part is I just showed you 2 great setups here. But can you survive being in the market from 2 o'clock, 2:40 to about 4:20, 2 hours without taking 2 trades? No, you cannot do that. You cannot. All right? It takes discipline. It takes years of understanding and failure to realize, you know what? Maybe he's onto something. Maybe he's right. But like I was, 1996, I had to figure out my own shit, or my own way. I even though someone said, oh, this is how to trade, I still had to try to figure out and blow up my stuff my own way before I realized, hey, certain people know shit, Excuse the language. I'm a little fired up. And the experience means a lot. So identifying these channels is number one. So when you sit down at the computer in the morning, go back and just identify it. It'll get you in the feel of it. The other thing this does is give you a visual look at how the market is moving in the stochastic rotation. The 9-3 is our fastest rotation. So typically that's our channel ups and downs. And the 60 is the big channel, be it the bigger ones. But here we have a channel down, up, down, up, and that's the 9-3, 14-3. And then the bigger channel, which is going all the way from here, all the way to down here, represent our 60. And when they all line up, what do we have? Right there it is. We talked about that before. All right. Now there's a lot of, I always want a good channel to develop. Do you start messing around after maybe 1, 2, and, this could be a news. Remember, if you trade this style into news, the volatility that comes in at the market open could really be explosive, or if there's some type of announcement being made by some type of market moving, Fed president, or anybody that could move the markets. That could be a serious thing, not to mention missiles and everything else that goes on in everyday life here. But once you establish those channels, and work on your channels, and I try to work with people here at Day Trading Radio. I love getting emails saying, "Is this channel correct? What am I missing here?" But you'll see it, and just put them together. Get into habit. You should see me everywhere I go. I just write down the channels. Out of habit now, I do, because I want to just, then I want to go back. And I said, all right, we had these channels. What here is telling me that this was going to break? What here is going to tell us going to break? What here do we know was going to break? And I'll go through that, and it's almost like that we're gathering information. We're gathering what works. We see our 9-3 and a rotation. Remember that 60-10, watch this. 60-10 doesn't, you could almost cheat and just say, I just want my 60-10 and 9-3. The key is, though, the 14-3 and the 44. The 44 is my secret weapon. For those that have been with me a long time, you know that the 44 divergence has never failed. Actually, I think there was a divergence just recently, and it had a move, and it didn't go as high as I expected, but it did move on it. I think this was it. Let me see if I can find it, because probably a couple days ago. But that blue line is in there because it has a serious effect on the market, and I know the signal that. But getting back to just saying, you could really cheat this by keeping that 9-3 and 60-10. That 60-10, because it's so slow, it's taking 60 periods of time added into the formula, and then we're smoothing it out by a 10-period moving average. That right there, you know, you kind of could feel where you want to be in the market, right? Here, 12:30, we have a trend line and we have a quad rotation. We have the 60. If your 60 is oversold, most likely everything else is going to be oversold because they're faster and they're already going to be down there. They're waiting for it. Half the time, these things are waiting for the 60, and when the 60 gets there, then you get the move. And that's amazing. Just like here, look at this. Anywhere I go in the chart, 12 o'clock. The important thing is it in a channel? That's another important thing about being in a channel. Once you're in a channel, channels break out for two reasons. All right? Channels break out. When we say breakout, change direction. A couple basic stuff that you want to know. We talk about pivots. Pivots is basically a move from one direction to another. Pivot it down to pivot up, you know? And those pivots are what we hunt. I'm a pivot hunter. I like that. I'm going to make a website for that. And those pivots, we identify those by either quad rotations inside the channel line, inside the channel. If we have a quad rotation inside the channel, there is a much better chance that channel is going to break out. Yeah, so you could take those trades as long as you're inside the channel. Once we break out and you say, oh, we're breaking out, and you get in, and you try to get in, you're going to get a bad fill, and you're going to be chasing this, and you might have a little profit if you don't take it off. Whoop, we're right back, and you're like, oh, I should have held on. You hold on a little bit more, then you're low again, and then the next thing you know, you're taking it off, and then it rips higher, and it starts a avalanche of bad habits. All right. So to be successful in this market, you have to be disciplined to identify the channel, then wait for the setup. When the setup comes, you have to have the guts to take the trade into that weakness. The great thing about divergence trading and stochastic trading is that we're buying into weakness and we're selling into strength. There is no way you could buy the low unless you buy the fear. All right? So when you get that quad rotation and you're on that trend line, you got to pull the trigger. That's how you become successful. There's a great quote, and I got to play it for you, right? I got to play it for you. They'll probably ban me. I think they banned me on YouTube today. I don't even know if this video, you might find this video on Rumble because I was following the Israeli stuff. But anyway, I don't want to get off track here. This is so important, all right? This is from the movie Ocean's 11. This is about trading, you know, and trading and gambling, you know, there's a fine line between the two, you know. It's a very gray area between that because there is nothing guaranteed about the markets, but you do have things that will help you define the levels you want to be in, you know. And we know that there's math involved, channels, lines, geometry, Fibonacci's. There's a lot of different angles of the divergence. All these things require a little bit more scientific in nature, but they work so well. So you have to, if you do want to trade that way, the most important thing is you have to stick to that and you have to wait for it because it's considered a formula, and that formula works until you start to dilute the formula with bad trades or contaminate it with some crap that you're trying to figure out, you know. not everyone's going to be successful. Not every trade. Some trades maybe break down a little too far and hit your stop. The majority will, and that's what trading's about. It's learning how to not be upset, and that you get into a trade and not be afraid of taking a loss in that trade. The odds are, when you have that quad rotation and you have a team behind you, hopefully you're trading with a group like us, then we're analyzing it live. Well, we know it, So anyway, when these opportunities come around, that's how you become successful. It's not the other stuff, being in the market. I'm a trader and stuff. It's being successful. It's being in the big opportunities and then taking the big shot. George Clooney did in Ocean 11, said something that's very same thing from gambling to the markets, especially for scalpers out there. You get hit with the commissions. You're in and out. One bad trade could put you back down. You could start tilting, what we call tilting, going off the rails and overtrading, and things get really. You have revenge trading and stuff. Very, very tough to do that. Eventually, most of the traders, because they don't have the discipline, will be burnt out or eventually get caught because they're in the market too much. All right? Same thing here. George Clooney here. And I, myself, believe that if you just take your certain shot in the market. Let's listen to this. This is great. Let me see. Sorry, YouTube, if you kick me off here. I don't know. Maybe you will, maybe you won't. I think I'm already gone.
Because a house always wins. Because a house always wins. Play long enough, you never change the stakes, the house takes you. Unless, when that perfect hand comes along, you bet big, and then you take the house.
When that perfect hand comes along, and you bet big, and you take the house. These are the perfect hands. All right? The perfect hand is a 44 divergence. A perfect hand is a multiple divergence indicators when they have multiple divergence. The quad rotation, I wouldn't say that's the ultimate signal, I don't. That's part of the super signal, but it gives you much better chances. It's like you're sitting down there at the, this is for gamblers out there, at the blackjack table, and you're sitting around people, and they're kind of upset because you don't know what you're doing, and you're taking a hit when you shouldn't be taking a hit and stuff like that, because there is a set of odds. Maybe it's still all random, but there is a cheat sheet out there that says you don't take a hit when the dealer has a 5 or 6, and there's certain things that you're supposed to do to increase your chances of success. Same thing with the markets, all right? Same thing with the markets here. We have our chances for success when the time comes around. Putting it all together, building it out. So as we build it out, and we're live building it out, as we, you'll notice the channels continue to play out. And every channel has something in common. It has a pivot. Pivot is where the channel goes from one direction to the next direction. From one direction down to the next direction, down. And our job is to find this. And we know how to find that. Because look at this, baby. Another quad rotation right here. And it's a lower trend line inside the channel line. And there's other things here. We have this little 200 period moving average, VWAP, rising trend line. All right? So important. Now, most people cannot sit around and trade that way. So, and we could go right through the day here, and the market opens up, here we go. Same thing. We have our first quad trend line. We can have a quad, but unless we have a trend line with it, like here, we can have a quad here, but there's not really a trend line until, I said, right about, remember we have 1, 2, and it really takes a while for that to identify these channels. I do them so fast. Like you can have 1, 2, 3, you have 2, you throw it up there, you just drag it down, it hit 4, and it comes back to 5, and you have a quad rotation on 5, and that's your trade. All right? There's no other excuses around taking anything other than that. That's what I'm teaching right here. If you're going to do something else, do not contaminate your profits with your from this with something else. This is it. And the more you're disciplined, and the more you could be in front of this level. Now we have other trades that we take. We know when a trade gives us, every so often these will break down. They might not give us a huge move. Maybe it gives us a little bounce and then rolls over. How do you know that? Well, 26 years of trading told us exactly how to figure that out. All right, and we figured that out by watching our fast rotation 9-3 compared to our 60-10, which needs to be embedded underneath the 20 line. And we know when we have, in this case, it's a really strong trend, so we're going to look at the opposite happening. And the opposite is when that 60-10 is at 80, and you get these rotations back down, we know that as this is pulling back, yet this is not pulling back, that the big trend is intact. That these pullbacks, as if I mark this off right there, this is what I call the 2020 bull flag. Now remember earlier in the cheat sheet section, let me see if I can find that again. Here we have it. In that anatomy of the bull flag. That's the super signal. Here it is, right here. Start, buy, enter, buy signal, enter when. And again, I make this pretty easy. Price has aggressively moved up off the 20-period moving average and a steeper than average move. So you see this here, this move off the 20-period moving average, off move to 20. That gives us the flagpole. The market is in an uptrend, trading above the 50 EMA. All right, the blue line, the 50. The 9-3 stochastic has dropped back down towards the 20 line. Here we come. 9-3 is coming down towards the 20 line. The 60-10 stochastic holds 85, preferably 90. This is very high here. As everything lines up, you take the trade either when the price hits the 20 EMA, right here, right? You're buying into that weakness. Touches 20. Very important to buy into weakness and start taking profits on the candle coming out of the flag. So that's usually about 2 or 3 candle trade to the upside. All right, and you might think that's too tight. You want to let it run and stuff. I'm telling you what works for me, because lots of times the market comes right back down, and I don't sometimes like that. I give back those, and it's we're all human, and I find that I like to hit and run trade. Because I could find these setups very easily now. So if I could wait for them and take them, that's the guaranteed trade. Holding on to them after I take profits and kind of hoping that a trailing stop goes higher. So I tend to take my trades off faster. But there is a definite advantage of holding on to multiple contracts, and I do recommend that too. So there's always two sides of all those stories. You can always look back saying, "Oh, I took it off, and it was right." But then you could look at it another time, and you'd be wrong, and the market went 50 points higher. It's not trading is not that easy. You have to develop your discipline, your patience, to put everything in your favor. This is very important. These are 6 rules. I'm going to just throw this out to you right now. 6 rules. The running divergence must be taken if you get stopped out on the first signal. Running divergence where you have, it's usually 3 pops to a top or 3 drives to a bottom. The first 2 look like a divergence, so you take that, but it actually pops a little and rolls over and goes down one more time and taking out the lows. Typically you want to have a stop underneath your divergence low, so that should take you out. But then what happens is the price moves back up. I have to show it to you, a signal. I'm just walking you through it. And you see the divergence still stands. You need to get right back in that. All right? 1, 2, 3 channels and trend lines are perfect trades when broken and retraced to. Divergence are divided by bull and bear flags. This is kind of like the next level. This is like advanced 101. You have 101 basic entry stuff. This is a little bit more advanced, not advanced, but they're better tricks or tips, I should say, for this methodology to work really good. Things that just that I kind of look for divergences after quad rotations, very good. And the 9th, this is really a great one. The 9-3 divergence and the 14 divergence together happens a lot. But if there's ever a 14-3 divergence without a 9-3 divergence, it's rare and more powerful. It's a very powerful divergence when that happens, and you should always take that trade. All right, a couple tips there. So now we have, everything here. So we talked about that retrace. One of those rules was when you break down to a trend line and come back up to it, a trend line tends to be a really good area of, resistance. And now you have that. You have another quad rotation here, double top. It might have even been a little divergence. There's things that I don't want to talk about yet on this video because they'll be over most people's, most of the beginners' heads. When we talk about the lip divergence and stuff. But there are certain divergences you want to watch out for certain times. So then you start to roll over and you start to say, all right, remember we said the breakdown, well, here we have a pivot, here we have a pivot, here we have a pivot. Once we have those three pivots, one straight line all the way down, drop that parallel line down to the closing price, and then trade the lower trend line if you have a quad rotation. Here's the lower trend line, here's the quad rotation. There's your move. All right. Now you come back down really hard. Now this is like 110. Now we start to see that there's, this is not the best example because this video will be out there in internet land for a long time. Just let me explain that today, Israel and Iran were fighting back and forth, sending missiles back and forth. Around 2 o'clock, Iran retaliated with a barrage of drones and stuff, and the market, caught wind of that and actually started to sell off. So when we have news like that, all bets are off. All bets are off when you have news. We still follow it, but lots of times you could get, like here, we have the quad rotation right here, and you might have this lower. I don't have a channel line here. I wouldn't say that's a channel line. There's not. It was just too steep. But if there was something there, you have to be super careful because things could get embedded down here. News is difficult. If you could step out of the news flow and just wait for your setup, it's, again, having that discipline. You might think, wow, these are big moves. This is where I want to make a lot of money. But you could also lose a lot of money. So wait for that pattern to come into. Boom, oh, boom, 1, 2, 3. Put the 4, 5, and 6 together. At least you're starting to look at, this level. If it got hit, no, maybe it doesn't get hit. Maybe it just takes off. Whatever. That was the end of the day. That was the murder algo anyway. But that's a basic walkthrough of the day. Every move is probably going to be in some type of channel. Identifying that channel early on using a 1, 2, 3 method, you could establish that and then wait for 4, 5, and 6 and wait for those quad rotations. That's the key to success in this market. There's other, and divergences and position sizing. These are things that we can talk about in the next video. I have a lot of that information in the playbook section there, so we'll talk more about that. Here's a great divergence right here. So that's our classic divergence. It's a low, a bounce, and a lower low, but a much higher rotation here. All right, and you can see it was a good 9.3. 14.3 was the little one. Nothing really there, but that's a good divergence. And we talk about when we get out. If you happen to try to get in and you get a fast rotation, there's a lot of news here. I always take it off on that fast 9.3 rotation. Even if you might get in a bad thing and it gives you 2 ticks or 6 ticks, gives you a point, maybe, and you're like, and I hate hearing this when I do coaching. I want to make $300 a day. I want to make $500 a day. Yeah, well, that is a sure way of overtrading and disaster. Right? You want to take the setups, as they come, analyze them, get the alerts for them, and then adjust your size based off the type of setup. You're going to learn that what are the best setups. The quad rotation divergence, #1 on the list. Quad rotation channel line, up there, very high. Those are the ones you want to take a bigger position. And a steady, stable market when there's no news. Do you know what your news is? Do you look at the news, the Forex Factory or Financial Jews or Benzinger? Do you look at your news feeds and see if there's any press conference that might move the market? You don't want to be in front of that. These are all things that a professional will do, or at least maybe they won't do it, but that you should be doing if you want to be the best at what you want to, the best at what you could be. Perfect practice makes perfect. Not just going through just trading and then trying to figure it out as you go, but perfect practice. Knowing something works and waiting for it. Waiting for that fastball if you're a fastball hitter. All right. One last thing. I hope that kind of motivate you. I wanted to motivate people because I know trading could be frustrating. And not everyone wants to do this, and they see the dollar signs, but it's hard. It's hard, and it's very not emotional, but stressful. Maybe it could be. Don't be stressed out about it. Once you start to not trade a lot, and you if you're trading 30 or 40 times, most likely you're doing something wrong on my feeling. But hey, you could be. Sometimes people trade this style of trading, and they trade a tighter time frame. They trade a tick chart or a range chart. Well, you never know, and some people might want to take a tick or 2 ticks. So you could get lots of trades. It really depends, but make sure the methodology. You want that high. You want that higher high. You want that low. You want that lower. You want that high. You want that lower high. Right there, inside of a channel. You have to be able to spot that. See that right there? High, high, lower high, inside the channel. Most likely you're going to break out of the channel. 9 times out of 10, if you have a divergence inside of a channel, that channel will break out, and that will be a new pivot area, just like that. And then that new pivot area will eventually, you can almost guarantee by looking at this and this where this was going to go because of this up here. This is going to be a parallel line between this, and everything came in perfect. You had a 9-3 rotation, which normally I would take it off, but you also had a 1-2-3 channel. 1, 2, 3. Now you could do a 1, 2, 3 like that too. Remember, the high of the channel that broke down is typically the first pivot. When the channel breaks higher, the low of the previous downward channel is usually the first pivot. So up here, this is the first pivot. So we draw that line. We wait for, that's number 1. Now we come down here, we bounced once, and we bounced twice. So we have 2 points down here. So I want to make that parallel line at that point. This is where we make that parallel line right about here. I see that. Look at that. We have that. So what I'll do is I'll say, all right, we have, and again, that might not be the easiest one for anybody to see, but you got to have your mind has to be understanding of every part of a channel means something. If you had a channel breakdown, all these channels, they show up here. And then you have these divergences. Look at this right here. High, higher high, high, lower high. Underneath the 20 is very important. Breakdown. High, higher high, high, lower high. Breakdown. Show me something else on the chart that's working like this. All right? Now, even here. And again, hit and run. We're snipers in this environment. I'm not going to say that I'm going to capture this whole move down here and take it off perfect, reverse it, and go all the way back up. If you can do that, then you're better than me. But what I'm going to do is I want to make sure that you get this set up. And what am I going to do to make sure you get that set up? Is I want to get that set up. And we do it live. And for those out there who are not live, here's an important announcement. I should have put this first, but I send these setups out. All right, I set them out as alerts during the day to the members using the Voxer network, well, what I call the Future Trade Alert Network. And I'll show you how that works. Let me just show you that fast. All right. All right, this is the live audio futures alerts. This is an app I set up, or a service I set up to identify or send out alerts when we have high probability setups. High probability setups is basically what this video was about, and how important it is not to miss these. So what I do is you get about 3 to 5 alerts per day, And basically, I'll put this link in the room. You could sign up for it on it comes with the Day Trading Radio membership, with a paid membership, or if you want to get it, it's only $20 a month, and you can get it on the Patreon site. That's patreon.com/Day Trading Radio, and you'll see it there. And it works on your phone. You download an app. You send in your username. I attach you. It's the Voxer walkie-talkie. All the information's on the site. And what happens is, I'm going to call out these trades as they approach. The object here is to get people in front of the computers before that. Quad divergences, quad VWAPs, quad rotations, coils. These are super signals, the combinations. And that's what I really want. I mean, there'll be times when we have bull flags and bear flags, but sometimes they move so fast. But these are things that I can see starting to set up to get you in front of this. This is such an important thing to do because, again, you see, basically, if we have a 1, 2, 3 pattern, I have a lot of actually nice charts on this site. So when you go to the site, scroll down to the bottom, and you'll see just a lot of what, just some good shots of what I like to send out, like a super signal, steep divergence, that will get sent out. If we have a 1, 2, 3 pattern, we have a quad rotation and a trend line, I'll tell you that's happening. 44 to divergence if we're in front of that. Now this is not automated. This is not going to send out 3 o'clock in the morning when I'm sleeping. This is now I am in the markets constantly. I'm usually sitting at my table at 9 o'clock in the morning. We're here until 4 o'clock every day, and then I'm usually 3 times Sundays, Mondays, Wednesdays, sometimes Thursdays. We're trading the overnight markets, usually from 8 o'clock to 12 o'clock at night. And I send out the alerts too, so that's good for Australian, European traders. So these are the areas that we want. Whenever we have a coil stochastic, this is a great example of coil. I'll send those out. Coil stochastic, a great setup. Basically, there's a lot of good trades. There's just examples right there. Today, just to give you an example, let's take a look at that chart again here today. All right, and let's take a look at, we start off the morning. Now, right at 9:30, the market took off. Remember, we had some news this overnight. That was the attack on Iran from Israel, and then the counterattack today was really overhanging the markets. But still, we still identify those channels. We still identify those setups. So let's see. When I send it out, this is how the process goes. All right, I'm going to play this for you. All right, so starting this morning, our first alert. This is what the alerts sound like when I send them out, and they would show up. They come across your phone like a walkie-talkie. All right, the time is 10:20 a.m. here. Our market here is approaching the quad rotation. We also have a VWAP underneath us, which we're looking down around that 59.80 area, so it's about 6 points underneath us. We've had a series of bear flags and this downward channel. Of course, the news. Now, just to let you know, at the time we were doing this, we were looking at the MES. So the MES and the ES had little different VWAPs on it. So that's why I have the ES up here. If we look at the VWAP, you'll see if I can bring that over here. There we go. Let me bring this over here. Cause basically, we trade a lot of the MES. So you can see the VWAP down here a little bit lower. And I had that lower trend line. Either case, we'll just continue on here. Let me get this, show you this again. Just putting some early pressure on the market. We're in a nice downward channel. Watch the lower trend lines. Again, our first quad rotation setting up right now, 59.85, but I think we could head a little lower to the VWAP, which is underneath us, down underneath that 59.80 level. So that was our 59.80 call right here. But it also was a quad rotation. So it's really about the quad rotation and the trend line. The areas around there could be 78 to 80, 85. It's, again, not an exact science, but the areas are very important. And the quad and having everything tied up. I prefer to buy into that trend line. That trend line is probably one of the better visual confirmations that we could have. And again, we typically use that. That's my the closing price of those candles. All right, So that's that. Let's take a look at the next alert. Now these are happen every day, so it's like. All right, the time is 11:34. S&P has rallied strong off of the 1020 quad rotation trade. It also was a lower trend line, 1, 2, 3 pattern, had everything going for it. Now we pushed up here to 60-20 area. Now we're running into a little resistance here, and we had a nice run. I mean, this has been a nice 40-point run. Now, just some thoughts going into the Friday. The Israel-Iran conflict and the missiles flying around. A lot of things here that could shake up the market. But we are still not at our main pivot area above us, which is, I think, a nice little target above us, which comes in around 60.26. This is right. The pivot is the green line here.
Now we're pulling off of that 60-20 level, which is, we are extended here a bit. So I'd watch for our first rotation. I think we'll have a great quad rotation. And once it sets up, it might set up down the road, down, a little bit further into our time, into the afternoon. But if we do get that first rotation, or actually the second rotation, it'll sure to be a nice bounce here. So just waiting on that. So at this point, this is where we're talking about the pivot being our target. And we got up to the pivot and we started coming back down. And what we're talking about is this rotation. The 9-3, 14-3, the 44, all starting to sell off, all coming down at the same time and getting oversold at the same time. Now these bounced, the 9-3 bounced back up, came down, chop. They all end up together. We wait on that 60. And when that 60 gets down there and we're on a lower trend line, 1, 2, 3, plus a lower trend line, that is a quad rotation. So I kind of put that out a little early, saying buy the next quad rotation. Wasn't sure when it was going to be. It was going to be down in the early afternoon, but when it was, we ended up being at lunch at this point, but that alert went out, so people should be recognizing that setup, because that quad rotation, after you've been embedded here, there's a lot of rules that we use on quad rotations. There's a whole, there's just a lot of information to learn about the quad rotation. Little things about when it gets embedded and how it works with the 9-3 thing. So when we're embedded here, we're only buying the 9-3 rotations above the 20. These are all flags. Flag. And they're pretty easy flags to identify, because we know that each one of these pullbacks, as long as this thing is going to be an opportunity. Here's a flag as long as the price is holding the 20. Here's your pullback to the 20, the 9-3 rotation, and this holding back. Again, we use 80 as our line, but you should be able to recognize the pullback and seeing the reaction on this. If this is not really losing any gap and we're almost there, but the price is on the 20, you buy it on the 20. First consideration is the price on the 20 and the 9-3. So that's what we call the 20-20. The price is on the 20 and the 9-3 is down by the 20. That's called the 20-20 bull flag. The 16-10 has to be up here above 85, preferably heading higher as this one's going lower. And these are our textbook flags. Eventually a flag will start to get a little weaker. They'll extend out, and then they'll eventually move over. Now this is a divergence, but we know all this. We've mapped this out earlier in the video. So that was, that was our first rotation. That was the alert that went out with that rotation here. And then we actually had this last alert here. All right, it is 2:24 p.m. We have now come into another quad rotation, but this is starting to set up as a little quad divergence. But we have to also say that we have missile attacks going into Israel that's caused a little more weakness in the market. So there is a lot of volatility here. Be very safe. There is a quad rotation divergence set up here. We're at 59.92 on EES, 59.92. Previous lows are right underneath us, 59.90, and then lower lows are way underneath that from the overnight lows. So just an update, but be careful, because going to the last hour with the Israel under attack, there could be more volatility here. So that's exactly what happened. This is exactly when the so we had that little bounce on the divergence, but it did roll over. And I was smart about it. I said I didn't want to be a part of this trade, because it's just when news comes out.
I hear something in the background. I wonder why that was still on. It must have recorded it. That's pretty funny. Um, that broke down, and that was basically news. Then we moved back up. Once we get back into that rhythm again, we just pick up identifying the channels again. But here, we kind of understood that missiles were flying around. We kind of broke down through we're just having a hard time rotating up. This was embedded, and this is the key down here. When this this stays embedded, and this starts to rotate up, that is our safety net. That means that's moving up. This is not moving up. That means this is going to roll over, and this is going to be a bear flag. And we already tried to put that bear flag out there. We're measuring, but it did roll over pretty fast. So that's just, again, every situation in the market on these channels can be defined in the methodology by a rule. All right, and that rule is at 60-10 embedded 9-3 rotation up. Price stays under the 20 or hangs around the 20, then that's a bear flag. You either get out of your longs, which I did, or you execute a short. And that was and then the market sold off, and then of course it was end of the day. We did start to get a little bit more choppy here going into Friday on the week. There's certain things that you don't want to trade at the end of the day today. Next week should be really good. But to get those alerts, I find those are the most important things to have, especially if you're not familiar with the setups and you want to get alerted to a setup and get in front of those computers, and so you don't have to trade it. This right there, like I said, if we look back at our 60-10s and you say, all right, it was one at 9:20, there was one at 10:30, there was one here at 12:40, there was one here at 13:10, but there was also breakdowns. We didn't count that, but that was a reversal candle right there. There's a lot of things to learn here. That candle, that combination of candles, what we call a canceling candle, and that kind of a little volume spike, and that volume spike is bigger than the previous 20 volume bars, and you have a reversal candle. We canceled that out. We canceled that previous candle, and that's why we continue to just look at that trend line as a good hold. The market will do that sometimes. It'll shoot down. There might not be any orders there. It'll flush out, grab an order down there, come back, and then settle back in. All right. Well, that's it. I haven't named this video yet. I think I'm going to name it. Here's the keys to success. But you're not going to be successful unless you establish that discipline and become that business. Write out that business plan, stick to it, be in front of the markets at the right time, and take this stuff very serious. All right. If you need any help, any assistance, I'm always around. DayTradingRadio.com. You can become a member. You can reach out to me. I put out a lot of information. Have a great evening. Happy Father's Day, everyone. All the fathers.